Welcome to the Stocks on the Rock Show. Whether you like it neat, on the rocks, chilled, or warm, everybody's happier when there's money in their account and a drink in their glass. Let's get started. Hey everybody, welcome to today's edition of Stocks on the Rocks. I am your host, Chuck Fulkerson, where I get to talk about one of my favorite things out there. I get to talk about a good spirit, a good bourbon, and I get to talk about a stock, a security, an equity, something that you might have an interest in from an investment standpoint. Now, if you're new to the channel, do me a favor, hit the subscribe button, hit the notification bell so you get the alerts and the updates. And while you're at it, do me a favor, in that little comment section down below, if there's a particular stock you want us to analyze, we'd love to hear it from you. If there's a particular spirit you'd love us to analyze, I'd love to hear that even more. Now, today we're going to do a little bit of a twist on what we normally do. I'm not going to talk about a specific spirit. I'm actually going to talk about we'll call it an accessory. So the holiday seasons are have just ended, and we are in January. And so going through what we got for Christmas and what we got. And one of the things that I got, which was amazing, is my very own whiskey aging barrel. So this is a 2-liter whiskey barrel. Now this 2-liter whiskey barrel, what I love about this is an oak barrel. This is charred on the inside, just like you would expect a whiskey barrel to be. Now, by the way, I say whiskey, you can really put anything inside of this barrel. This can be whiskey, this can be wine, you can age wine in here, you can age rum, so that you know, tequilas, you can age pretty much anything you want in these barrels. And what I really like about it is it's completely handcrafted, all handmade, bung hole here at the top. You've got a wooden spigot nozzle down here at the end, and it's even charred with a little bit of my signia, my family crest, if you will. Now, one of the things that I'm doing with this is I'm aging a very, very, very low-end whiskey. And what I'm trying to do is just finish it. And so I'm finishing it. What I'm doing is tying, you can see a little string that I have here. Every couple of days, I'm tying something to the string and hanging it inside the barrel. So I think right now I've got an orange peel hanging inside the barrel. I've done a little bit of a caramel candy. I think I'm probably going to do a vanilla bean pod. I might do a black pepper, couple of black peppercorns, and the whole idea is to impart some flavors and really smooth out the taste. Now, one of the things about this is that when you do this, you get some aging that's actually substantially faster than the aging would be in a normal barrel. So this is according to redheadbarrels.com. Got this little chart, and what it says is essentially that a 2-liter barrel, in 2.64 months, ages about 1 year of a traditional barrel. So if I can age this thing for about 6 months, you're essentially going to get about a 3-year aged whiskey, which would really put a nice finish on some of the younger whiskeys that are out there. Now, one of the things that will be a byproduct of this is that some of the water will evaporate, and that evaporation of the water means that it will, you'll have to add a little bit of water to kind of get the flavor profile to where you want it to be. Or if you like something that's barrel strength, this is going to actually continue to strengthen as that dilutes. So I'll let you know how it goes. If you've done this and you've got some ideas or some ways to finish it, do me a favor, put that in the comments down below. I'd love to get ideas. This is something brand new for me. So our security that we're going to talk about today, kind of changing gears a little bit, is ROKU. So ROKU is essentially, you know, when I first heard about ROKU, I heard about a streaming stick, right? And you could put Netflix on it and Amazon Prime on it and all these other things. And then ROKU said, well, let's get into the device game. So ROKU's kind of the hardware piece, right? And on that hardware, I can have Disney Plus, I can have Netflix, I can have all those other things. And so ROKU came out of the gates at about a year ago, it was trading at about $40 a share. Now it's up in the 130 range. And what in the world happened between there and here? Well, from a fundamental perspective, ROKU is, I call them a content aggregator. So what ROKU does is they create some of the hardware and then they aggregate some of the software, some of the other streaming services into one platform to make it convenient and easy. Now, as a guy, I have ROKU. I have a streaming stick or two. I have the box, and I even have a ROKU television. So I'm a consumer of ROKU products because I find it very, very easy for me to get everything I need all in one spot, and it seems to work pretty well. ROKU has not been
totally profitable though as of yet. So when we look at the fundamentals of Roku, their earnings per share was down about 144% in the last earnings per share. And so it does have a little bit of a fundamental problem with the growth of the stock, but there is news all over today. And the reason I thought I would talk about it today is because right now in Las Vegas, the Consumer Electronics Show is going on. And with the CES going on, you always have companies that are talking about new things. And so Roku shares jumped as they saw that Roku was starting to gain a lot more traction. They're assuming that more cord cutters are going to come in. And Roku is just a great avenue for those cord cutting families to be able to still access all their programs and shows. And so, the question came out is that we had a good consumer electronics show, so we think that Roku has some chance to jump up. And I think as of today in like mid-January, we saw that Roku jumped about 4% today. But what I care about more than the fundamentals and more than what the media is telling me is what are the technicals telling me? And one of the things that's important to look at is what does the chart tell me to pay attention to? So let's look at a chart. So the first chart you see here is a 10-year weekly chart of Roku. Now, we certainly don't have 10 years worth of data. We're going all the way back to the IPO, which was about $15 a share. It went from $15 a share to a high of $176. So it had a meteoric run. And now it's sitting down at about $134 a share. Well, if we look at this, to me, this is forming a bit of a symmetrical triangle pattern right now on the weekly chart. And we've just crossed below the 20-week moving average. Matter of fact, if you look at our last prior candlestick, you'll see that we have that really high wick that tried to get back above the 20-week moving average, however, was unable to do so and closed below it. Our current chart has us just below that 20-week moving average. Now, you see the line that I drew there at approximately $75 a share. I believe that is my longer-term price target on Roku. I think that Roku's probably a little bit overcooked, and I think that $75 a share price target seems to make sense. Now, what does it look like on the way to there? Well, if I slide off the weekly chart and move down to the daily, what you'll notice is we have a little bit of a fair price value area of demand below current price, but at about $110 a share. So there is room for a breakdown on a descending triangle pattern for price to continue to go down into that region that I got highlighted off in yellow. So for you more short-term traders, swing traders, I think there's a good opportunity for that smaller time frame play. Question is, how do I play it, right? How do you play that? Well, volatility on the stock is very high. You can see on our Traders Army implied volatility gauge down at the bottom, we see that our implied volatility is in the upper third of its range for the course of the last year. Matter of fact, it's almost to that upper fifth. And that's the area where we would look to do spreads, specifically credit spreads. So the interesting thing about a credit spread in something like this is we may do what's called a bear call spread. Now the bear call spread says, I think price is going to stay below a certain number. So in this particular example, we're looking at a bear call spread that expires in about 39 days. And it's got a credit of $4.07 against a $10 spread. That's an excellent credit. Now, why are we getting a credit so high? It's because of the way volatility is currently placed. Now, little cautious, we have earnings coming up on the 20th of February. So technically we should be done with this before we would reach into the earnings position. But this sets up a really unique play that says, I'm going to profit as long as price stays below 135. So if you've got that bullish bias and you believe that chart says, you know what, I think our better chances are to go down, this allows you to make the options play with limited risk. You've got a limited exposure because it caps your exposure in these credit spreads. I know it's a little bit more of a complicated strategy, but I thought that I would bring it up because I thought a lot of you would appreciate it. So thanks for joining us today. If you've got any issues or any questions about any of these equities or trades or options that we look at, please go to tradersarmy.com, send us an email, support@tradersarmy.com, so we can answer whatever you have. Also, if you've got a specific spirit you want us to analyze, I would love to do that in the comment section down below. Please leave it down there. Till tomorrow, till next week, everybody. Cheers.